Rana is Times business editor and business columnist and has just written a book called Makers and Takers, The Financialization of America, which is a quite extraordinary effort that is having an amazing impact already. And she knows I've been an enthusiast about it for some time. Alan is one of New York's great technology leaders and is probably one of the longest serving venture capitalists in the United States and has been involved in many, many great companies and has a tremendous lens on what's happening with the economy, Wall Street, and technology. But I want to start by asking Rana a little bit about her book. And just first to talk about, what is, it was interesting in the Time excerpt, the cover was all about saving capitalism, which was a little more sort of extreme even than the way I thought you had framed it otherwise. Do you really think capitalism needs to be saved?
Well, if you step back and think about capitalism, financial market capitalism, the way Adam Smith would have thought about it, for example, it was a system that was supposed to take everyone's savings and funnel it through banks, through financial institutions, into business. But the sort of the killer stat in my book, which is based on a lot of deep academic research, is that only 15% of all the capital flows coming out of US financial institutions today actually end up in business investment. So that's a minority. Basically, that is a minority of what financial institutions are doing today. So where's the rest?
Small minority, yeah.
Small minority. And so where's the rest of it going? It's going into trading. It's going into the bidding up of various assets, stocks, bonds, houses. A lot of it's going
in derivative products being traded back and forth, et cetera, et cetera.
Exactly, and derivative products. It's also going into the mortgage market, which has a lot to do with, I think, debt and the problem of debt in the U.S., both at a consumer level and a broader level, which we can get to. But the bottom line is it's not going into business, which is what it was set up to do. So in that sense, yeah, I think the system is broken.
So when you say that America is being financialized, what you're saying is that we are not able to have, and this is going to the question of growth and even productivity and a lot of other things. I mean, I guess maybe you just answered it before, but restate, what is the problem of financialization?
Okay, so when I say financialization, what I'm talking about is a 40-year process by which the financial industry has grown in size and scope and power. And so just a few metrics to give you a sense of what I mean. The financial industry is a percentage of GDP, and I'm talking not just banks, but asset management, insurance, certain kinds of real estate trusts, et cetera. That has about doubled since the 1970s. It's now about 7% of GDP. But that industry creates only 4% of jobs and yet takes a quarter of all corporate profits. So that's a lot of economic oxygen that's being sucked out of the room. And it's not news that this slows growth. The IMF and the BIS have done really deep studies showing that when finance gets to be about half the size that it is in the US right now, it slows productivity, it slows economic growth. And this happens in many countries, by the way, not just the US. So that's one aspect of it. The other aspect, though, I would say is more cultural. There's a mythology that I think we've all kind of bought into and just sort of take as the status quo, as second nature now, that finance is the very pinnacle of the economic ladder. It's kind of what we're supposed to graduate to after we go from being an agrarian society to a manufacturing economy to a services economy, and way up here is finance, and that's the main game. That's what we're supposed to be aiming for. I would actually say we should flip the narrative and say financial services, and I stress the word services, should be just that. They should be in service to industry and to real innovation and job creation rather than a game in and of itself, which is, I think, and my book argues, one of the main reasons that we see slower growth and a growing wealth divide.
So why has this happened in summary?
So, there's not one single reason. Basically, there was a 40-year shift. There have been a lot of policy changes. One of the things I find fascinating in the 2016 election is that every candidate takes a sliver of this issue. So Bernie says break up the big banks. Trump's talking about taxing hedge funders more. Hillary wants to work within the existing system of Dodd-Frank regulation. But the formal banking sector themselves, itself is only one part of this. We're also talking about shadow banking, private equity. We're talking about a tax code that actually incentivizes a lot of unproductive behaviors on the part of corporations and individuals. We're talking about broken housing policy, retirement policy. So it's a whole ecosystem. But one thing I would say is I wanted my book to get away from the finger pointing at just bankers are bad or the 1% is bad. That basically what happened was in the 70s when American growth began slowing, overall trend growth for a variety of reasons. Europe was back on its feet following World War II. The emerging markets were starting to emerge. Trend growth started slowing, and I think that there was a moment in which politicians and regulators thought, well, you know what, we don't really want to look at this too deeply and take the tough decisions of what to do with a shrinking pie. In a way, it was the guns and butter debate. And so they threw the ball to the financial markets. And then for the next 40 years, across both Democratic and Republican administrations, a lot of policy decisions were taken to basically help the markets create what I think is a kind of saccharine growth, a very financialized growth, rather than the real thing.
When you say threw the ball to the financial markets, you mean let financial systems allocate resources, in effect.
So you could maybe start it with deregulation of interest rates, which again wasn't a terrible thing. People weren't doing trying to be venal. They were at that point. The Carter administration deregulated interest rates because they wanted to figure out ways to deal with the financial system and housing policy. But the upshot was that a lot of foreign capital flowed into the U.S. That then through the 80s, 70s and 80s allowed the markets to kind of paper over a lot of problems that were happening on Main Street with financial services and with the growth from financial services in the markets. You then had the privatization of our retirement system. A lot of money then flowed in from 401ks. You had decisions taken during the Clinton administration about how corporate compensation could be paid out. More tax deferment of options, which I would agree then led to what we're seeing with the stock buyback phenomenon today, where a company like Apple, for example, has $200 billion of cash in an overseas account and yet is issuing all this debt on the market to, I would say, to bolster its own stock. So lots of small shifts and then a snowball of dysfunctional behavior.
Okay.
How's that for simple?
It's good. And I want
How would you like to be on this platform dealing with someone with all these facts?
Well, I want
God, I gotta get rid of this. This guy's a legend. Oh my God.
I want to hear Alan's response to this, and I also want to hear. I want to try to dovetail technology and technology trends, and even possibly the sharing economy into this conversation. But one last question to you, which is, when you think about it all this way, do you feel, in looking at today's current environment where Trump and Sanders are sort of rallying the left out of America, who are truly left out, and there's people taking different points of view on why they were left out, but do you feel it was perfectly predictable that so many people would have ended up feeling left out, that we would then have this response of populism?
To me, it is predictable. I mean, I grew up in rural Indiana, and my dad he was an immigrant actually, ran a small manufacturing business, and so I kind of saw firsthand the last 20, 30 years of the shifts that we're talking about, which dovetail with technological change and globalization. And in some ways, those are parallel trends, but they intersect in ways that strengthen and catalyze each other. So no, it's not surprising to me. And in fact, I think what I'm talking about in my book goes a long way towards explaining both the extremism, on the far right and on the far left, because you have a group of people that really hasn't benefited from the financialization of America. If you think about it, the top 10% of the population owns 80% of the stocks. So if you're not in that basket, then you're not benefiting from this trend. In fact, you're maybe even hurt, sometimes severely, by this trend. And I think that that's what's happening now in this kind of insider versus outsider debate.
Even something as elementary as the fact that if you have a savings account with Citibank, you're getting 0.75%.
Exactly.
But if you have a check, a lending, a credit line with them or a credit card, you're probably paying 15 to 18%, which is insane and totally disproportionate, and nobody really even questions. We just pay these exorbitant interest rates and get so little in return. That is something.
Well, and you've just
odd.
named like two parts of the story of financialization is the economy's total addiction to low interest rates. I mean, that has become, we've got to have near zero interest rates to generate any kind of growth.
Except for the financial industry.
Except for the financial industry,
selves.
which, by the way, and here's another thing that is.
I'm not saying I agree with you, but anyway, go.
I love it. You're such a good advocate for this.
I'm not saying it.
Okay.
Finish what you're saying.
But no, the other thing that
And then we gotta
yeah, no, I'll just say very quickly. One thing that always amazes me is you're absolutely right. As the financial sector itself has grown as a percentage of the economy, fees have grown. Now, economically, that's not what should be happening, right? You know, if you think about Walmart, as things get bigger, prices should go down. It's this kind of law of gravity that applies to everybody except the financial
Well,
industry
maybe we
itself.
need one big monopoly bank, but no. But Alan, so what's your reaction? And you don't have to have the facts. She's clearly a fact freak here, and she's got a lot of them. But your intuitive reaction to this is what?
I come at it a perspective of a venture capitalist. As a venture capitalist, I have investments all over the country, and I'm in Tampa, Charlottesville. I came from Minneapolis, day before yesterday, Indiana, and there is a groundswell of entrepreneurism that is happening in this country. And I've been in this business, as David said, I will tell you specifically, I've been in this business 46 years. So I've been through every cycle anyone in this room probably has ever experienced. And I have never seen anything like what's happening. I see Dawn Barber sitting here, who runs the New York Tech Meetup. There are 1,000 people every single week every single month in this building. And what amazes me, she could comment more, is that they ask every time when it starts, how many of you have never been here before? And it seems like everybody except me raises their hand, because I've been there before. But I say, where are they coming from? And if you go over to Brooklyn, if you go to Queens, if you go to Tampa, there is a groundswell, there is excitement. Everyone who goes to college or university today wants to be involved with a young company. And maybe the capitalism you're talking about, and I'm not adversarial, I'm not going to get into one side or the other, because there certainly are a lot of inequities, and I wish I could help them if I knew how. But there is a spirit in this country, in spite of all the things you're talking about, that absolutely cannot be stopped. We all know about WeWorks. I mean, I saw WeWorks when it was $1 billion valuation, and they just did a round of $16 billion. I saw Travis from Uber when he was just thinking about coming to New York. These companies have risen to enormous. WeWorks has, I believe, someone may know better, 10 to 15 buildings in this city. In this city, 15 buildings full of people who are starting businesses or building businesses. And he's all over the country now. He's in Los Angeles, I've seen it in Chicago. So my point is, maybe we're having this, instead of industrial or corporate capitalism, maybe we're seeing people's capitalism. The Jobs Act was passed a year ago. It's bringing out the opportunity for lots of people, everyone in this audience, no matter what income level you're at, to participate in this groundswell that's taking place. So I'm not as discouraged as you are based on what I see. I mean, we see, and I'm not exaggerating, I'm glad to prove it to anybody, we see between 50 and 75 new companies every single week in our office in New York, and we see between 25 and 35 in Los Angeles, because that's where we have our two offices. I mean, think about that, and the number in a year. Somebody has got some feeling that this society hasn't disenfranchised them.
Another thing
people are financing these companies. They're getting financed.
Another thing that's changed is it costs so much less to start a company. I mean, there's so many resources that are available for either free or very, very little that used to be extraordinarily costly to obtain and necessary to start a business. So that's clearly a factor.
Yeah, and you know, I am mystified, as probably a lot of people are, how interest rates are so low, and it's not stimulating more activity with the availability of free money. It's basically free money. And
but I think your answer is that it's not being lent out.
Well, no. Actually, what I would say about the Fed and the low interest rates is that this has been not just the last 8 years of them dumping $4 trillion into the markets and having near zero rates, but we've been doing this for close to 40 years now, and so we're tapped out. And what I would say is a monetary policy.
Tapped out of what?
Tapped out of what it can do for growth. that I think not only tapped out of what it can do finally for asset growth. I mean, a lot of people think that we're entering a period of lower trend returns for some time, but it never could actually fix things on Main Street. It can only, monetary policy is a Band-Aid. It can buy you time for either the government via fiscal policy or business via real investment to change things on Main Street, but it's not a fix itself.
But what is your response to Alan's observation, which does seem, I mean, it's also reflective, I think, of the feeling of a lot of us in the room that certainly we see the inequity, we see the populism rise, but I mean, it is astonishing the energy being directed towards company creation in some parts of the economy.
No, it's a great point, and actually I'm happy to be here with Alan because in many ways you represent the best of finance, and actually I wouldn't include venture capital so much in what I'm talking about. I'm talking about really the basket of the bigger organizations, shadow banking, hedge funds, private equity, insurance companies, things like that. So venture capitalists typically do make real investments, but that's still a small portion of the overall
Absolutely.
financial,
Tiny.
you know.
We're a sliver of the amount of startups that take place. I mean, the venture industry, I don't know, it starts 4,000 or 5,000 companies a year, and there must be a million or more. I forget the numbers, they're public information. But I see what's happened in the last several years to try to address you. Dodd-Frank really has done something, and if let to go forward, it will do even more in the fact that you don't have proprietary trading anymore. Interestingly, 5 years ago, a lot of the private equity funds, the venture funds, were funded by the banks putting their own capital in. That went away 3 or 4 years ago, and yet we're all taking in lots of new capital. There are lots of people who want to invest, but they're not the banks. So, I mean, I think that a lot of the correction is taking place. And the fact that the banks charge high, first of all, for their bank loans, they're charging not 15%. And the reason they're charging, I don't want to defend banks. I don't want to defend anybody. I'll defend myself. But 15% interest rates in credit card, their loss ratios, I am sure, justify that kind of interest rates, whether it's 15 or 13 or 12. And when it doesn't, other lending sources will come in to fill it out, as is happening now. We had a hiccup with the lending club the other day for other reasons. But there are peer-to-peer lending is starting, new banking entities are coming out, and they will cut into the market if there is an egregious profit. But traditional, you can borrow, if you're a company, you can borrow interest at 3, 4, 5, 6%. I mean, you're not paying egregious rates. The banks, the companies have a lot of money at the moment, and they're not finding enough use. We're in a 2% growth economy. It's interesting. Every time I think about it, you're in the venture business. We don't borrow money, so I have no opinion on interest rates. I couldn't care less whether interest rates go up or down. They don't affect me. And it's always surprising when people realize that. But there is money all over the place to finance businesses, and nothing to do with interest rates. It has to do with pure equity capital.
It has to do with interest rates in that because people can get so low of a return in traditional, depository and other activities, buying bonds, et cetera, there's way more incentive for them to take more risk in hopes of getting more return. So it does help fund your industry, wouldn't you say?
They're not trading off complete protection against high risk.
But I think you're
I don't think. I mean, maybe it has at the edges. I won't say that. No.
I think you're making a good point, though, about risk being dispersed. I mean, it's true that risk has moved somewhat out of the traditional banking system, in part because of the Dodd-Frank regulation, but it's moved into other areas, into more opaque areas that are harder to see, into shadow banks. It's even moved into the corporate sector. It's funny that a lot of cash-rich, giant tech companies are underwriting corporate bond offerings the way Goldman Sachs does, except it's even harder to get the information on that because it's not in your typical SEC filings.
But why is that necessarily bad, or do you care? Why do you care?
Why do I care? I always care when I can't see who's taking risks. I mean, we've just had a correction in the junk bond market, typically, and even Exxon got downgraded, by the way, so it wasn't just junk bonds. And typically, when you've got problems starting in a sector like that, they can funnel elsewhere. My problem is that things are still too complex, and too opaque and too disconnected from Main Street. I mean, you've got the markets here and Main Street here, and at some point they have to intersect. And one thing I will say that I have found fascinating as I have put this book out into the world, I thought I was going to get calls from Fortune 500 CEOs saying, "Oh, we're so happy you're finally sticking up for us. We're under so much pressure from the markets." Not at all. I mean, they're just afraid of losing their jobs, so they don't want to put their hands up. But the financiers themselves, enlightened financiers that are actually worried about this problem of slowing growth, are calling and saying, I'm really interested in that. And you see giant pension funds and asset management companies starting to think about, wow, we have a 40-year change point happening here where we may be going into a period of slower growth. That's in part because the developed countries have become so financialized. How can we use our capital in a way to combat this? So in a funny way, it's like coming full circle now.
Okay, who has a comment or a question? Michael, just shout it out because I don't, well, no, okay, wait for the mic, there it is. Thank you very much.
You talk about the financialization of America. You just mentioned here, we've seen similar reactions in UK, Europe, Japan, Taiwan, most of the developed world. Why is this a global issue as opposed to local politician issues?
So I'm really fascinated by that question. I actually think the next theater of financialization is China. China is at a really interesting point, both economically and politically. They're kind of where the US was in the 70s, in the sense that underlying growth has slowed. They need to make a shift in the economic model to go to the next stage of development. There's a big political debate going on within the country right now about how that's going to take place. Some people want to argue for a markets knows best kind of philosophy, and you even hear Chinese policymakers talking about Reagan-esque supply-side economics. You have others that want to take a different model and go more towards a kind of industrial policy type approach. It's funny, my book just got, the rights to it just got purchased in the Chinese market, and they're very, very interested in this phenomenon. It is a global phenomenon. The Chinese debt levels are unbelievably high right now. The run-up in Chinese debt has been really worrisome, and so it's completely a global problem. It's just a matter of when it comes to each of the emerging markets.
Okay, I want to shift gears, even though there's more hands up, because Alan, one of the many things about Alan that's interesting is...
Here we go.
Sorry. I think one of the last times I saw you in person, you had just come back from going door to door for Hillary in New Hampshire. He is really big in on the Hillary campaign. And I'd just like you to talk quickly about how you see the landscape right now in the political race, Alan.
Well, we're getting now down into the mud.
It doesn't have to be.
okay.
You tell me what it is.
We're already there.
Obviously, I'm a Hillary supporter. That goes without saying. I am totally frustrated by what's happening. I can't really. I can explain it because we've gone through it with Bernie and with the Donald, where we've gotten two individuals who are so negative in everything they do, and unfortunately, I'm really speaking honestly, Hillary has been painted into a corner that she really doesn't belong in the corner. She can't get out of the corner. She's stuck in this corner, and by that I mean she's as much in favor of having a better health system in this country than any of the candidates. That's all she got killed for in the 1990s, was her trying to come up with a new healthcare system. Who doesn't want to solve the problem of debt for kids in college? It's a given. It's motherhood, and yet they've taken the issue away from her. They've told her, Bernie makes her that she's involved with corrupt business people. She's involved with Wall Street. I'll bet you that Hillary hasn't had a dinner with Lloyd Blankfein in the last 5 years. As I've said in the press on several occasions, she's more more attached to Anna Wintour than she is to, and it's the truth, and I mean that. She's a much closer friend, and she spends more time with her, and Diane von Furstenberg and all the other people in the fashion business. And yet they've painted her as if she's a tool of Wall Street. I mean, it's so unfair and inappropriate. They've attached the corrupt 6 big banks. I mean, she has no more to do with the 6 corrupt banks than anyone else there. And in terms of Citizens United, that one I know for sure because I've talked to her about it. I mean, I hate raising money. and I unfortunately have to do it. And I, for example, do not raise PAC money at all. I abhor it. And Citizens United, and Bernie says, I'm going to change Citizens United. Nobody can change Citizens United. The Supreme Court has to have a new decision, a new process, or Congress has to pass new laws. In terms of carried interest, I am close to her, and I personally, although I will suffer from it, I have come out publicly saying carried interest is ordinary income. And Hillary said it a year ago. I hope I had some influence on her taking that position. So when you grab these issues of student debt, free college, we can't give free college. It's impossible. You know, it's great for Bernie Sanders say, I'm going to give you free college, eliminate debt, I'm going to kill the big banks, I'm going to change the finance laws. When you get none of it can happen. When you go to Donald, I mean, he is just off the wall. I mean, I don't know what the hell he's going to do next. And the biggest fear I have right now, and I'm one person. I'm not a spokesman. I'm not involved day to day with the campaign. I haven't been to Brooklyn in a month, at least, to the offices. Is you just don't know what he might do, and I don't know how you fight a campaign on issues. I know she should absolutely not get into the gutter with him, but I don't know how she runs an issues campaign and talks about facts when you have someone who starts out calling her crooked Hillary 15 times a day, which is crazy. It's crazy. He even brought up Vince Foster's death 25 years ago now. I mean, it just, they had a commission on that decided it was suicide. And he is just determined to bring up every single piece of dirt there is. So it's going to be a very tough campaign. I'm fairly certain she's going to win, but it's not going to be fun the next few months, and I feel badly for her.
She managed that email server in her basement very well.
Yeah, but you know, that's fair. It's fair. It's fair. But you know, it's been so blown out of proportion. It really is. I don't know the facts anymore. I read the same papers you do. I know nothing about it. So I can't honestly comment on that issue. But the fact that Colin Powell had it, and I thought there was someone else, another Secretary of State, they didn't bring it out.
I don't want to go down the
yesterday.
email server.
Yeah.
He was actually saying a backhanded compliment, I think, actually.
No.
But
Okay.
I don't
They'll
want,
bring out anything. I mean,
I don't really want to dwell on it further. I just really want, I thank you for sharing that. I just didn't want to let you off
one
the stage.
person's opinion.
You have a very informed person's opinion, and I think everyone in the room was happy to hear you talk about it, whether they agree with you or not. And I definitely think we are all wide-eyed at what's going on. But having someone as close to the process as you, and
Yeah, with a
sharing
bias
with
though.
us,
So I mean,
well,
I
I think
see it
most
from
of us
one
have
side.
some biases here. So, well, thank you both so much. It was really
Thanks, David.
interesting and exciting to have both of you here, and congrats on the huge success your book is
you.
having.
Thank
So,
you.
thanks.
Thanks.
Thank you, Ellen. Thank you so much.